Again. There we go. We're live. Okay, we're on the air. Hi, everybody. Little delay there. Sorry, we had some delays on our internet, but we're back up. And welcome to the last hour or so of the day, plus the first hour of aftermarket trading. How you guys doing? Welcome back to Stock Markets with Bruce here in Creston, out of Creston BC. Beautiful sunny day. I mean, it's gorgeous looking. Unfortunately, it is cold. 18, 19 for the high today, and it's going to be colder tomorrow. So that Arctic front that has been wreaking havoc through the middle of America, Canada, we've got the edge of it here. Tomorrow will be the coolest day, I think, for the week, and then we slowly come back the other direction. So hopefully we'll be back to plus positive temperatures above freezing. We'll probably be in the mid-30s next week. Looking forward to that at least. That's not an end-all be-all, but it sure beats 15 to 20 for the high. I don't want that. My friends in Calgary are 0 for the high today, 0 Fahrenheit. The lows are minus 20 Fahrenheit. Yuck is the word for that one. So I'm glad that we're okay. Watching GameStop while I last saw you, the shares hit a high of 62.83 today. Interesting how they performed. They're presently at 52.92 coming into the last hour. We'll see if a slide continues or whether there'll be another run at the higher range of the day. But that's interesting to see it as high, $10 higher than it is right now. Honestly, while I was off the air, it went up $10, honest. So there you go. What can I say? Volume 32 million shares today for GameStop. The markets have gone positive. I think the Treasury Secretary Paulson said the right things that the market wanted to hear. Looks like the Dow's up 129 points. The S&P up 8, NASDAQ up 15.8. So all positive. The Dow definitely had about in its first hour and a bit, it had the dip. And then turned right around, and it's been coming on ever since. Sort of broke even for a while, hung around even, a little lower, little up, little down, and then in the last 30 minutes, 40 minutes, it's definitely had a move up, and it's now at 132 to 31,500. That's got to be record territory for the Dow. I'm going to just double check that right now here on my phone. Yep, that is now reaching and hanging around all-time record territory. The index was down to 31,200. It's now 31,509. So almost a 300-point reversal from the low of the day to where we are now. Very positive for the overall markets. The cruise stocks, Carnival only down a nickel. Norwegian is up 19 cents, about 1%, and Royal Caribbean is up only a dime. So they have backed off from their positive openings or stronger openings in early morning run. Bond rating agencies have rated Carnival bonds 4 notches below junk status. These are now becoming high yielding and higher risk bonds. The other shares I'm following, the folks at Gore's Holdings, that's the one that's going to be merging with Matterport. 17.85 up $1.16. Over at the Virgin Group acquisition, it was under $13. It was under $14 into the 13.90s. Now $14.33. Only off 41 cents. Those shares in this neighborhood here, $14 range, they're a buy. And as far as I'm concerned, I think they're a buy. I think that the merger will be a successful one with a $950 million cash position upon listing, and very well backed by a lot of institutional friends. There's some deep institutional followers there that are strong, mega big, like Google big. There's friends there. There's some friends. And something tells me that this company has a lot of plans for their company. And once they're publicly traded, funded, they can then go ahead and make all kinds of partnership arrangements, all kinds of deals. And I think that the news wires will be very busy with corporate announcements and a lot of momentum behind the company. So this is not going to be one of those sleepy little listings on the New York Stock Exchange. Think again. There's going to be a lot of activity there. GameStop 51.66, backing off again, still up $1.35, but definitely coming back. AMC was up higher today to the 659 range. Right now, 580, only up 30 cents on the day. It has given up a lot of its run. Bed Bath & Beyond up $2.14 near the high of the day and holding 29.26. So Bed Bath & Beyond has kind of awoken from its slumber of the last few days. It's been very quiet. BlackBerry down 21 cents to 13.22. A definite improvement since this morning's first hour and a half. It came back from a dip. It was as low as 12.75 this morning and as high as 13.49, now 13.07. And that's a bit better than what it's been doing the last few days. Well, a better performance, but still down on the day, let's be honest. All right, there's where we're at. The Dow up 133. Wall Street likes what they hear from the Treasury Secretary. They're not worried that there's going to be a massive run on interest rates or anything like that. Your mortgages aren't going to run you out of town. There you go. There are some shares running today. The pot stocks, they say. Tilray had a big day today. Again, I am not too convinced about pot stocks having any long sustainable run until it's federally legal in a federal level in the U.S. It's got to be federally allowed, and I don't know if the Democrats have the stomach for it right away or not. This is something that I can see happening at the very end of a presidential term, usually at the 7-year mark, 7.5-year mark of an 8-year, 2-year deal. I could see that. I don't know if the Biden people will want to legalize pot in the first 6 months of the administration, because I have not heard from pundits out there saying that it's a done deal, it's going to happen, it's a promise to be made to the voters. I don't quite think so. Anyway, we'll see what's going on. And Mads is here. Hi, Mads. Hey, Bruce, watching from Denmark. Could you briefly tell me why you recommend Virgin Group Acquisition Corp? Been looking at it last couple of days, and maybe now it's a buy. It is a buy. I like it. I like the fact that the Branson people, Richard Branson and his group, are the creators of the SPAC with a bunch of cash in it. And I like the fact that the company they're acquiring, 23andMe, very well funded. They've raised hundreds of millions already as a private company from some serious investors, and this company will be listed with $950 million cash on hand to get going. This is not going to be a slow motion, slow build up kind of company. This company is going to be turbocharged right off the get go as a public corp, and so I think it'll be all right. But anyway, that's just me. What do I know? It's a buy, so definitely it's a buy. All right, let's see. Any more comments here? There's a lot of people talking to each other. And let me just take a peek here. It will turn into ME when the merge is complete. It'll be known as 23andMe. That's right. And there you go. I don't partake in weed, Ollie. I'm not a partaker. I never have been. Not a drinker either. Very, very rare do I have a toast or a toddy. Love my caffeine free. Bruce, do you think some big hedge funds are going to squeeze GameStop before the short float gets to a more reasonable percentage? Why not weaken the competition? Well, the shares, I think, are poised for a bounce. They had one today. They had a couple today. And I think going forward, they're poised for a bounce. I don't see desperate sellers trying to get out. I don't see stockbrokers nailing these bids to get people out because they're over margin. That's just not the case. The GameStop shareholders today, for the last week, have not been allowed to buy the stock on margin. It has had to be cash buys only. And so the vast majority of retail traders that hold this stock, who could possibly be forced out, can't be forced out. They own the stock cash. It's a strong hold, and there are gaps in offerings. Maybe some shorters were nibbling on it all day long to hit it all afternoon, because they stepped back. The shorters backed off, and the stock came up to 62.83, and now the shorters may have at that point started to hit again and sell off, and see how low they can drive the stock, and test this $50 support level again. It was this morning at 46.55, ever so briefly, but something tells me that if there are not shorters trying to hold it down, there's no selling. That's my interpretation of it. And I'm beginning to note more articles. I'm beginning to see more bloggers appearing here and there talking about the GameStop longer-term story. And they're one of them was saying, I read something today about how a lot of folks aren't traveling right now. They're stuck at home. They don't want to travel right now because of the variants and so on. And until they're vaccinated, they're going to stay close to home. One of the things you can do close to home that doesn't cost you a lot of money is play your video games. If you've had them for a couple of years, you don't have to keep paying to play them. And if you want a new game, you can always buy a used game at GameStop at your local strip mall. Pop in, grab one, off you go. So if you have a gaming system, there you go. I also read today and heard today on CNBC over here, there was news about the chip shortage. Have you heard about the chip shortage? That's the microchip shortage. Ford, for their truck production, they're going to be delayed in getting trucks off the line because of all the various chips they're using inside their trucks for all of their systems. Other companies are having chip delivery problems, including Sony. Sony with the PlayStation 5. And again, this is adding to the pent-up frustration of gamers. They cannot get these new consoles that they're dying to get their hands on. And Sony is having trouble getting their chips in. They're having trouble getting parts delivered from various factories to their assembly station to get these PS5s assembled and shipped out. And this is telling me GameStop will be selling systems in advance for a number of months. It's going to take probably till the summer before there might be a satisfaction of the demand and the supply regarding these new gaming systems. And GameStop, like everybody else, will basically sell every game system they can get their hands on at full retail. There are no discounts being offered on these brand new gaming systems. And this is good news for GameStop because it keeps their margins nice and high, even in their brick and mortar environment. But as they shift out, especially all the sales they're making online right now, they're getting top dollar for these items, the Xbox and the PlayStation 5. Zal, GameStop had a restriction, SSR today, both green days last week. Interesting. The short sale restrictions were on. A and B, rumors rumbling of a Starlink IPO, getting in on another Musk company. I know several eager to buy the service in my circle. Your thoughts? I don't know anything about the Starlink story. I don't know the story on Starlink. I'll have to research it. I'm not aware of the deal, but I know who Musk is. I know that guy. So we'll see what's going on. What else are we having here? Lots of comments coming through. Thank you, everybody, for being here. We got 1,262 of you here. Please make sure to get a thumbs up going for this telecast. Spread the word. Get more people to join us as we come into the close. 50.80 now on GameStop. 50.86 up 54 cents. So the short sellers are taking a run at the bids. They're hitting the bids. I do not believe that this is panic selling from any investors. There's no long investor trying to get out desperately. None of that nonsense. This is programmed short selling. The lower the shares go, the lower the offers go, to keep the offers coming in and in and in, to try to hit the bid down and down and down. And of course, as I'm speaking, it just jumped to 51.19. But this, to me, I'm thinking they're going to try to hit the 50 bid to see what the level of support is. If they can bust through it, maybe they hope that there's some momentum on the downside. I don't know if that'll happen or not. Volume on the day, by the way, 33,500,000. So 50 million free trading, about 22 million short. Of the 50 million free trading, I don't think more than 10 million actually do trade. So we're dealing with about 30 million shares that could trade. We've had 33 million turnover. So lots of turnover today. That's why there was a run up earlier today. There was just a lack of stock available. Unless short sellers were offering it, there's a lack of paper. That's my interpretation of what's happening here. 51.10 now on the stock. up 79 cents. There it is. Let's see how it goes. The Dow up 119 now. Crested a little bit here. We'll see how it does in the last 40 odd minutes, 45 minutes. S&P up 5 points. NASDAQ down 1.8 points, 1.1 points. NASDAQ looks like it's flatlining, might turn positive as well. Interesting to see what is going on. Literally says, with all-time highs despite there's still a pandemic, how should we invest in the stock market? Well, again, it depends on your age. It depends on your risk tolerance level. It depends on whether you are sitting on a pot of capital you've built up over the years, or whether you're going to contribute to your investments over time. You've got to decide and make up your mind which way you really want to be headed here going forward. Just 1 second, folks. I want to make an adjustment here. Be right back. As the sun is fading behind. I am back. Just had to adjust my lighting here in the house. A little too dark for me. I like a little more light. We are getting a few clouds, wispy clouds, and so it's not as bright as it was a few minutes ago. You probably noticed that this side of my face isn't shining, and this side darker as much as when I started the show. But if you've got a time frame that you're going to add money to your portfolio over time as you're growing, then you should put together a long-term investment strategy. And depending on how much money you're talking about, if you have over $10,000, $15,000, you can certainly talk to an advisor for at least an hour. I mean, it might run you a $100 fee, $150 fee to sit down with a professional to kind of review your taxes, income, plans, needs, all of that, and then help figure it out. But otherwise, if you're just looking to invest a few bucks in the market, you got 500,000, 2,000 bucks, then you can open an account with many firms online without ever talking to an advisor, and you can in effect invest yourself. I would recommend, if you're a conservative investor and you're looking at a long-term plan, then take a look at some ETFs out there, exchange traded funds. Do some Google searches on exchange traded funds. Find out which of these funds you like the most. Maybe an index fund. Maybe you'll want to buy a computer chip manufacturing ETF that follows chip manufacturers because of the chip shortage. Maybe you want to go into travel or leisure or retail or real estate or accounting. It goes on and on and on, following FANG stocks. And then just slowly but surely invest into one ETF or two or three different ETFs. Start with 1/3 of an allocation for each one, and then just add to it over time. Build up a portfolio. That's an easy way to do it, and it could prove reasonable long-term strategy to employ. You don't have your money in any one stock, not in one basket. The market has a good week, a bad week, a good month, a bad month. Thank you, Lana, for your PayPal donation. I just saw it. Thank you. It doesn't matter because you are diversifying your holdings. These ETFs might have 100 different stocks in each one of them. Global. They may well be global as well, not just North American domestic. And that way you've really covered yourself. You've really spread a blanket over your investments, and you can confidently just add to your position every month or every quarter or whenever, and build up a nice little size nest egg. And then when you've got 20, 30, 40 grand saved up, again, as you're moving up, you may then begin to talk to an advisor, and you'll tell them what you're doing. You'd say, I've been doing this now for a little while. I've built up a little nest egg here. What are your thoughts? And where should I be headed? I'm age such and such, and I'm going to do this, and I'm doing that. I'm saving for a house, or looking to start up a new business, or I'm going to go self-employed, or I'm a long-term career individual. The job I have is a job I'll always have. I mean, it all depends. We're all different, and there is no one magic formula for any of us. The only way I can tell you that we could all get rich, overnight, is if we all bought a lottery ticket and one of us had it come in. Then one of us would get rich overnight. That's the only foolproof way of going rich overnight for not a lot of money. A couple of bucks on the lottery ticket could make you a millionaire. But otherwise, you got to work at it. Musumi, do you think do you think GameStop for the long run is a hold worth? What do you think I should do? I would hang on to it. I wouldn't sell GameStop. I really wouldn't. Stick around and let the company convert over to an e-commerce company and go from there. I think that they'll trade at much higher values. I bought GameStop at 280 and at 120. Painful. Hope some good news from the company itself comes out and drives the stock up. What do you see as the main reason for a potential spike? I don't know about a spike. I mean, a spike is from 51 where it is now to 151, and there's only one way that can happen. You got 100 shares wanted and one for sale, whatever ratio. It's 1,000 to 10, 10,000 to 100, and there's no stock for sale, and everybody wants in at the same time at any price they can get it. I don't expect that to happen again. It happened a month ago, and I didn't expect it to happen then, but it did. But that was an exceptional, wacky circumstance. What I see happening with this company is a slow, steady realization by the street, Wall Street, that the company is going to become an online retailer, and it will start to trade on a sales multiple like other online realty online commercial companies are. That's how they do trade. And I can see the company trading at 5 to 1, 8 to 1, 10 to 1, 12 to 1, 12 times sales. So I can see that. All I know is right now, the last number we got on GameStop for their online commercial sales, their online sales was 1.3 billion. And that, I think, was for a quarter. That's not an annual number, but it represented 34% of their total sales in a quarter. And that's my hunch. Now, I might be wrong. It might have been an estimate for the year. It might have been in the past year, but I'm not sure about that. But that number is increasing dramatically, especially with these game systems. That number is much higher. But if they were to trade at 10 times earnings, or 10 times sales of 1.3 billion, that's a $13 billion market cap company. And a $13 billion market cap company is a lot higher than it is now. Because right now it is a 3.6 billion market cap company. So you multiply the current price by about 3.5 to 4 times, and you got yourself a stock in this $175 to $200 neighborhood. Based on the number we know, that is an old number before the Sony and the Xboxes came out. All right. So if the number is going to be released here shortly that says that their online sales are $1.8 billion, multiply that by 10, you got an $18 billion market cap company. Now you're talking about a stock that could be 5 times or more higher than it is now. And that would push it into the 250 range, but not overnight. I don't see it opening one morning at $250 a share. I just see it going there. And when it gets there, the forecast could be that in the next year, the company is expecting their e-commerce sales to reach 2.5 to 3 billion. Well, that could put them as high as a $30 billion market cap company over the next year to year and a half, 2 years, estimates. That would then take the stock to 400 a share, 450 a share, based on the metrics that analysts are using for other online selling companies. And I quote Chewy. Amazon trades at 80 times earnings, which is incredible. If this company made $5 a share, 80 times earnings, $400 stock, it adds up to that kind of performance and beyond. But I'm only talking the first couple of years here, because they have got to convert out from the stores, which they are, to online, which is what they're doing right now. All right. If I'm repeating myself, it's probably because I'm getting new viewers asking questions that some of you have asked me a week or two ago. But the answer is the same every time, guys. Yeah, thank you for this channel, Bruce. Darwin is saying, Wall Street Journal put out an article stating Fidelity sold 9.3 GameStop shares on January 29th. How ironic that it was the day they got shut out. Curious in your thoughts. They did not sell the stock on that day. Okay, let me clarify that. I'm glad you brought this up. I did read this. No, they didn't sell all the shares in one day. The story is that from about the middle of January till the end of January, they sold the stock off during the 2-week time frame. And that is exactly coinciding with when the shares were being between $150 to $400 a share. So whoever the sellers were at Fidelity, they sold off a lot of their stock at wonderful prices. And they went flat. I think they're down to 87 shares or something like that. But that's not to say that they're now buying them back again. That could be going on between now and the next report we're going to hear about towards the end of this month. So I know Wall Street Journal covered the story about their drop in stock from about 9.3 million shares to almost zero, but it was not done in one day, one trade. It was done over time as the stock probably ran up and backed off. They just offloaded it and cashed in a wonderful profit, of course, and probably for their mutual fund holders. And it'll be interesting to see if they have been or will be beginning to reacquire shares again a second time around as the company moves towards becomes towards a seller, a commercial e-commerce company. Keep in mind too that what was I going to say about this? The shares that they sold were free trading shares. They were not insider restricted stock. None of that 20 million. This is part of the 50 million that was out there. So they were feeding stock, and who bought it? Who bought all that stuff? Probably the shorters to cover their losses. The shorters were covering their losses, and these guys were feeding stock into a hungry market, and that's what was going on. That's why we've gone from 70 million short to 60 million short, now to 26 million short. That's what's happening here. The stock had to come from somewhere, and this is part of it. So you've got these long holders who've cashed in big time. We heard about the hedge fund, believe out of the Boston area, they cashed in 700 million in gains on their purchase of stock that they made last year in August, September, October. They bought in and they sold at the height, not knowing it would go any higher or lower. They sold out and took their money and are sitting on the sidelines. The question now is, going forward, will hedge funds and other pension funds come into this stock in these levels or around these levels as the company keeps converting over? Thanks for talking about SPACs. I'm in REITs for the dividends, but I like the backdoor IPOs that SPACs provide. Bought 1,000 of that Virgin Group Acquisition Corp and 900 of FRX. I'm glad you like this. I'm glad you're following it. I am not surprised at the popularity of SPACs. I think there's a real good reason you want to be into SPACs, because it's all about management. You're buying into management and the potential of management, the track record of management, and there are stronger and stronger, more well-funded SPACs coming out every week. And I like some of these mergers and acquisitions. I did hear one about today. My verdict is still out on whether this is a deal worthy of recommending to you, but I'll tell you about it. Let me just take a look at the stock here. There we go. The company is called Atlas Crest Investment Corp. Atlas Crest Investment is a symbol ACIC on the New York Stock Exchange. And for the day, it's up $275 to $13.99. So this is a SPAC that came out a while ago. And for the 52-week range, I don't think it's been listed a year, but it's been between $9.73 and $15.75. It hit $15.75 first thing this morning, which is usually what happens, and it's calming down right now. ACIC, Atlas, is merging with a company called Archer. Where am I here? Archer Aviation is creating and designing a vertical takeoff aircraft that can fly about 60 miles in range at 150 miles an hour. It is designed for urban environments like, say, downtown New York, Manhattan, where you can lift vertically and fly to a nearby airport, all by electric means. These are electric-powered aircraft. And they're looking at this kind of business. They are talking about the company merging together at $3.8 billion of enterprise value. They're going to do an additional funding of stock. They're issuing some more stock, and they're going to list. I'm trying to find my notes here. The talk is that they're going to list with a bunch of cash on hand, about $1 billion cash on hand. And apparently the United Airlines has entered into a deal with Archer Aviation to give them $1 billion order for the aircraft, subject to, of course, certain terms and conditions, like 1, they work, 2, they're safe, 3, the federal aviation, the FAA, will license them, all that good stuff. But Atlas Crest is $13.99. It was as high as $15.75, and I didn't like that price. If it gets back into the $12 range, maybe that's a little more of an acquisition point. But this will take a couple months as well. Just like these other SPACs, they take 2 to 3 months to execute the paperwork to put them together. But the story on this one is it should be a $3.8 billion deal with $1 billion in cash in there and a $1 billion order. And I use that word loosely because this isn't like a guaranteed buy. It's like you deliver the merchandise and we'll buy it. There's a $500 million option behind it for United as well, and I'm sure all of this is renegotiable. And I don't think a dollar has changed hands between United and Archer. Not a dollar. It's all show me, and I'm a buyer. But we're committing to buy if you can deliver what you say you can deliver. We'll follow that. See what's going on. I'm not as interested in this deal as I am the other two, because the other two are in business selling actual merchandise, where this deal is simply a possible entity. Yes, Archer has had a lot of cash go into it. Yes, Archer has a lot of technology. Yes, they have a lot of potential. Yes, they have a potential buyer for their product, but they don't have a product. They haven't done a test flight. There isn't a plane you can get into that will take off the ground in an all-electric format that they have yet designed or built. They've designed it, but they haven't built it yet. So show me more. The stock, like I say, did a run today on the hype, but the hype is quickly ended, and now it's coming back down. So yeah, we'll see what happens. It's got to back off closer to the $10 mark for me to be convinced. Smash the like button, says my name is Helig. Thank you for that donation. I appreciate it. Joel, Harvest. Harvest and one other wheat stock have gone through the roof today. I love you, Uncle Bruce. Yes, the wheat stocks have had a good day today, but I don't know how sustainable this is, because again, it's all about, when it's all said and done, the upside for these guys financially will be if the United States government, through the White House and the Senate and Congress, pass legislation to make cannabis legal federally, and that allows all those pot shops in Denver, in Colorado, and Washington, and other states where it's been licensed, to actually open bank accounts and be able to transact business through Bank of America, accept credit cards for payment. It's all shut down. I mean, it's still a hodgepodge of acceptance and denial. The United States itself has got to get its act together on a federal level with their states, because these states are so far ahead of the feds on a number of areas. This is a classic case where the U.S. federal government is in the 60s, and the population is 60 years ahead of them. And look at those silver-haired people in the Senate. I mean, you're talking about 70 and 80-year-olds that you're trying to convince those guys. They're so deep into the religious vote you're not getting them out of there. So it might well be that Biden has to wait for more of them to pass away from old age and be replaced with 50-year-old senators so that they can finally pass it. I don't know, kids. In Canada, Trudeau went on an election campaign 6 years ago and got elected, and he had a number of points that he said he was going to enact as prime minister if elected, and one of them, and he did not back off, was the legalization of cannabis in Canada at the federal level. And he came through within a year or so of being elected. It happened. I mean, there was no stopping it. And the conservatives who were in power before him weren't going to do it. And they're accusing the liberals of creating a drug culture and all this crap. Well, it went through. And Canada is not drowning in pot users that are passed out on street corners. It's just like going to a liquor store. You just buy that, take it home for consumption, and a lot of the sales are actually consumables. The pictures that the opposition parties tried to use to stop the liberals from getting elected were of Woodstock, and rock festivals, the long-haired, bandana-wearing, hippie radical, smoking some weed with smoke in the air, and they were just trying to scare the mummies and daddies out there for their poor little children that these people are going to take over. Well, those people are now 65 years old, 70 years old. They're your grandparents. People, so many politicians forget Woodstock happened in 1969, man. Yeah, that was a while ago. Okay. So things have changed. Yeah, a lot. And anyway, America, wake up, America, and join the planet, would you? And cut it out with this stupid criminalization of marijuana. I mean, give me a break. But I'm not a user. It's up to you to decide what you want to do. I have nothing against anyone wanting to enjoy it as long as it's legal. Okay. I don't dare cross the U.S. border with anyone I know in my car that might have any of this stuff on them. Of course. Anyway, there you go. When Woodstock was on, I was 14 years old. Okay, I wasn't at Woodstock. All right. Oh my gosh. All righty, here we go. AB, as a Canadian, what do you think of the more conservative elements of the USA calling Biden a communist? Wouldn't he be a right winger in Canada? Yeah, and he'd be a moderate up here. He would be very moderate up here. He is a moderate in the U.S. This guy is not a left-leaning psycho or anything like that. He's certainly not a right-wing zealot over here. He's right down the middle. He's Main Street, common sense America from where I sit, just on most of his policies. But, America has gone crazy, hasn't it? There's 20% over here, 20% over there, and the rest of you guys don't know what the hell to do. It's unbelievable. I don't know what to tell you. It's I hope you sort it out. Cody, what are your thoughts on using a percentage of your portfolio for speculative investments? Do people have success this way? What percentage if early in the career? Well, yeah, when I was a broker back in the day, and I was a manager back in the day, my brokers came into my office asking me this question all the time. They would be saying to me, look, I've got this guy who I signed up as a client 6 months ago, and I put him into some really solid quality stuff. I mean, we're into the telephone stocks, and we've got utility stocks, and we've got, IBM in our high-tech stocks back in the day. But he calls me up today, and he's talking to me about a buddy of his that's an oil and gas engineer at an oil company here in town, and they're talking in the lunchroom, or they're over the water cooler, about company whatever that's drilling a wildcat well outside of so-and-so in the northern Alberta. And if this sucker comes in, it could be a new gas field, a new natural gas field up there, whatever the action was. What do I do? And I would say to my brokers, try to keep your clients 90% into the good stuff and have a hard and fast rule that you can only use 10% of your money in something like this to just limit their exposure to a heartache if this thing doesn't come in. And also, when you get them into the stock, don't be the last guy in the room. I mean, if it was 50 cents a week ago and it's $8 now, you missed it. It's over. Talk them out of it. Tell them you missed the boat. Call you next time when it's at 55, 60 cents. Don't call it $8. But if you do get them in at $8, put in a market sell order. It's like a stop loss order at 750. And if it goes back to 750, you're out. You're out, and it's over. It didn't work out, because if it's working out, it's going from 8 to 20. If it's not working out, it's going from 8 to 2 to $1. Get out at 750 on a sellout, and sit back and see what happens. Well, half of them would listen to me. Half of those guys would convince the customer. The other half couldn't, and then there would be, the orders would go through the desk, and I'd see these blue tickets going in on this hot stock. And here we go. The gamblers are out, and the half that didn't put them in at all were usually the winners. The half that did put them in but convinced them to have a stop loss had limited losses. The other half, whose clients convinced them to take half the money out of my account to put it in there, they lost it all, and now they were grinding again because the broker couldn't hold them in or couldn't convince them to, take the longer term. Flyers are flyers. And if you're betting on an oil and gas company that's drilling one well that could make or break the company, you are in front of a slot machine, buddy, and you're just pulling the handle. Except instead of putting in quarters, you're putting in thousands of dollars. And that's exactly what investors were doing in Alberta through the 70s and the 80s. They were taking risks because they were young clients. We had a young city in Alberta in the 80s and the 70s. It was a young town. It was a boom town. And they were just not thinking ahead because they had 4-year-old kids, but they weren't 14-year-old kids. And they were in their 40s and they weren't in their 60s. I get it. I understand. Anyway, 17 minutes to go in the day. $50.97 on GameStop, up only 67 cents on the day. That's where we're at right now. And if you get 96% of PayPal donations, would check or money order to your P.O. box give you 100, or do you prefer PayPal? Just checking. PayPal. Please, PayPal. The only way you want to send me anything in the mail is literally, I've had this happen. People will send me a greeting card and they put in money. They put cash in there. Don't send me a check. You can send me a check, but it can take a month to clear because of the cross-border banking restrictions. It's so antiquated and so stupid. The so-called money laundering crap. A $40 check can wait. It could take 2 to 3 weeks to clear. It's so stupid. And if it bounces, oh gosh, I'm in trouble. Then my bank will nail me $50. It's ridiculous. So honestly, PayPal would be the best. It is the most secure, and for Jen and I, we kind of go, oh, that's nice. That's great. We don't mind losing these few percentage points. It's great. But yeah, thank you. Thanks for asking. That's a good question. I love questions like this. But we do get the surprise once in a while. We'll go downtown to our post office box, and you can send me anything you want in the mail. There it is. There's my address in the post office downtown in Creston. You want to send us a postcard? You want to send us a greeting card with some money in it? Actual cash? You got euros that you don't need, or British pounds, or Canadian dollars down there in the U.S. that you can't spend up here? Throw them in there. We take American currency too. Ship it up here. Yeah, sure. I'll find a way to handle it. Anyway, the address is down below in the description of all my videos, and you can always send us something in the mail, and I thank you very, very much. But PayPal is instantaneous, absolutely instantaneous. All right, there you go. Can I send Bruce $20 US, and then he sends me back Canadian $20? Keep the difference. No questions asked. The problem, of course, is the postage will eat up the differential, and the cost of the envelope and the time involved. It's not worth it. It's just now if you send me 2,000 US and I send you back 200 Canadian, now that's a deal. Or yeah, that'll work for me. But I'll only send you Canadian though. I'm not sending you back American. Finally, use for all those Canadian quarters. Don't even do it. Don't do it. Don't be sending coins in the mail. Oh gosh, that'll screw things up. I'll mail you some Bitcoins. I've had people send me gift cards, Costco gift cards. We appreciate those. Walmart gift cards. Yep, those are okay. Some people have sent me electronic gift cards. I'm not a big fan of those because I like holding something in my hand and having that gift card in my pocket when I walk in the store. But I have had people send me electronic gift cards, and it gets done through the phone, and I get to use it at the checkout. But sometimes I forget that I have them, and I don't know where they are, and I don't remember my password. And as an old man, it's just gone. It's useless. So yeah, PayPal. Okay, where are we at now? We're coming into the close. 14 minutes to go. The Dow has backed off. It was up 100 and something. Now only up 24. S&P has gone negative by 6 points. NASDAQ is definitely negative at 53. Terribly negative? No, but just enough. GameStop, 51.47, up a buck something, hanging in there. AB sending me another donation, looking to invest in Vanguard IT Industry ETF. They rank it as a high risk reward. Is that relative for an ETF? What do they mean? It ain't a penny stock. Well, ETFs and mutual funds get ranked on a high risk, high reward level, medium risk, medium reward, low risk, long-term capital gain or a dividend type portfolio. You buy into a Vanguard IT industry ETF. You take a look. You can find out what shares they have. You just go to the Vanguard company, look up that ETF. You'll find the symbol for it. You'll find it inside their listing, and then they'll show you their portfolio. You can see what they've got, and you'll find the Apples. You'll find the Amazon. You'll find Alphabet, which is Google. You may find a whole bunch of high-tech companies. Some you recognize, some you might not. And then you can literally check out those companies if you want to, but you can look at the return of the ETF over the last year or two or three or five and decide for yourself if that's what you want to have. If you're taking a long-term hold on a stock, an ETF like that, you're going to buy $500 first and then buy a couple $100 every month after that. Fair enough. Go ahead. And you're just going to have an average hold, an average pricing. Some months it goes up and you buy more. Some months it goes down, you buy again. Goes up, you buy again. Goes down. You're just slowly but surely acquiring more ETF units, shares. And in the long run, the hope is that the market keeps doing what it's doing. The FANG stocks keep doing what they're doing. They keep growing and compounding their earnings, and you'll do well. Tom, thank you for the $9.99 donation today. Thank you very much. Drizzle, thank you for the $2 super chat. Thank you guys. Appreciate it. All of you making donations to Jen and I. We are very much appreciative. So yeah, you can pick that up. You can buy index funds that just mirror the index. And you think the S&P 500 is going up another 20% in the next 2 years? Buy the index fund and ride the gain. You want to buy the NASDAQ or, again, sectors. And that ETF you mentioned is definitely a specific group of stocks in a sector of the economy. You want to buy chip stocks, you might be into that right there. Those might be a lot of the chip companies like Intel and the others. Others names are escaping me right now, but there's a number of chip companies you might be able to get your hands on through the ETF by buying the unit. Now you're exposed to a whole bunch of chip makers. There's a shortage, a worldwide shortage, and they might do very well financially. Already 51.51 for GameStop, up $1.20. We're coming into the last 10 minutes of our trading day. I haven't seen any announcements today by GameStop itself. Nothing corporately has been revealed or mentioned anywhere, and so we'll just keep an eye open tomorrow to see if they have anything to say about what they're up to and what's going on. But as I say, the markets are down a bit from their highs. There we are, GameStop now, 51.47, volume of about 34 million shares, which is more than the true free trading shares that actually exist. That's a turnover, but they were as high as 62.83. They have not hit 50 since this pullback from that level. There may well be a war coming up, an alignment of a couple of armies happening between now and the bell, where short sellers might take a run at the stock to try to give it a bad, ugly print, where they're going to try to get it to look really sick tonight, have it close at 48.92 or 47.84. They'll just try to hit they might. On the other hand, there might be so much power at 50, so much buying interest, that the shorts really aren't interested in dropping that much stock just to get a print under 50. Again, these are the games that happen on the exchange all the time. Thank you, Anna, for your donation on PayPal. Just there it is right there. Thank you. That is the way to go. We do appreciate it. We don't have to wait for the mail to arrive. It's great. It's instant. Fantastic. Ben, Bruce got in at the Virgin Group at 17-ish. I'm seeing quite a big red number at the moment. Should I sit tight or buy more at a reduced price? Look, in the low 14s, I like it. It was for a brief moment, it was under 14 this morning, but it kind of came back a bit, and it's been hanging around this 14.20 range, 14.50, 14.30. So I like the price here. It's a long-term deal. It's not a flip, and I like the direction overall. So yeah, if you can get some in the low 14 range, or tomorrow morning you get lucky and it pops down to 13.75 for a bit, or lower than that, pick it up. There's not a lot of downside here, really. You didn't get in at the $18 hype number. You got a little higher at 17 or so. I got you. But if you're picking up more down here, you'll average it out, and you'll be all right. It will go higher than 18, in my opinion, when this is all said and done. I'm not recommending people buy this because it's at 14 and it's going to go to 18. I think the upside is much, much higher than that. We'll see. We'll see what it brings you. 52.13 on GameStop. It's picking up a little bit here at the bell, coming into the last 7 minutes. No one is talking about GameStop today, of course. The indices, the Dow is up 38, now up 50. Really jumping around on the Dow here the last hour or so. Now up 50 points. S&P down 3, NASDAQ down 44. So there's a little, back and forth action going on in the marketplace. We'll see what's going on. Thomas saying, thanks for your hard work. I thank you for being here. Bruce, what do you think of the upstairs trading theory on GameStop? Yeah, this upstairs game thing. There are reports out there, and there are people out there who are making comments about shares trading on the market and shares trading off the market. Now, in my day, as a broker and branch manager, there were times where we would have a block of stock. We'd have, say, 50,000 shares of a company at $10 a share. It doesn't matter what the name is. It's in Canada. And we would have one entity that was a seller, and we had another entity that was a buyer. Now, maybe it was, Joe and his company owned the stock. He wanted to sell the stock to Fred and his company. It's a private arrangement. They've agreed that they're going to one's going to sell it to the other guy, but they didn't want to have it be interfered with on the market. They didn't want to go through the stock market and have all the commissions. And so they would come to us and say, look, I have an account with this company, and my uncle has an account with that company, or it's a business relationship. We would get a call from a lawyer saying, my client so-and-so owns this many shares, and he's made an arrangement to sell or transfer shares to this guy. We want to do a deal. And we could do, in theory, you could do an off-market transaction between two parties, but you'd have to order the stock certificates in street form, and then you would have to do a transfer of the stock from one person to another with a check going the other direction. That can be done in a law office. You don't need me for that. But what would happen is we discover that we would have a client in Toronto that owns the stock and a client in Calgary that's buying the stock. And now what can we do to transact the deal? And we could arrange block trades on the exchange, and we could negotiate the commission on each side of the transaction in advance. We would work out what the commission will be for the buyer, the seller, and we'll try to figure out what the pricing will be depending on where the market is. If it's half a million shares and it's worth $4 million, we'd find a way to accommodate everybody, but there still would be costs involved. Now, what we're hearing here is the so-called upstairs trading. This is block trades being done off the market, not on the exchange. And I'm not familiar with this from my time in the business. In my time, it was done through the exchange, or we would do we would do a transfer in the market range, but we prefer to do it on the floor as a cross between buyer seller. It would just be a cross with the same house. Our floor trader would go to the floor on the TSC or the ASC, wherever it was trading at. And if the stock was, say, trading between $4.95 and $5.05, and the two parties agreed it would be a $5 deal. So if the bid was $4.95 and the ask was $5.05, it didn't matter what the last trade was. The floor trader could go to the middle of the floor and yell out, "Crossed 50,000 XYZ, $5 a share." And everyone on the floor would go, "Yeah, so what? Who cares? It's in the middle of the market. It's between bid and ask. No one can interfere with it. No one can question it. It's a done deal." And he would write his buy ticket, his sell ticket. He would say, "What do you want to do? You want to cross 50,000? Hang on. Cross 50,000 XYZ, $50. Yeah, okay, you're done. I'll fill out the paperwork." And he'd hang up the phone, and now he'd write the tickets. It's a done. It was a no-brainer. The question was, what was the commission on each side of the trade between the buying broker and the selling broker? Was there one? And we would have minimum commission trades and all that. We would usually do a minimum trade or it would be a no big deal transaction because it's in-house transfer of stock through the exchange as a listed trade. It was a no-brainer. But these trades here, I'm not sure how this works nowadays. My guess, it's all electronic, of course. No paper changing hands. It was theoretically electronic in my day because it was a book entry. We would have a book entry in Toronto that they sold 50,000 shares at $5. There would be a book entry in Calgary that they bought 50,000 shares at $5. And then the accounts would show the next morning, one account would have all this cash in it, and the other account would have all this stock in it. And we would do the trade when the money arrived, or it would take 5 business days to enact the money. We would be called by the lawyer. I have the funds in trust. We will deliver the funds for the purchase to your office from our trust account here at the law office. No problems whatsoever. We never had an issue with doing those deals. But here on these trades, this is done apparently on all stocks all the time. And I don't think these shares registered on the floor. And that's where I'm a bit puzzled by it. These are members of the floors doing transactions. Are they allowed to do so, and under what circumstances? Can't tell you. I'm not a New York Stock Exchange specialist to tell you the deep rules. I will tell you that we have a minute to go before the close. We're in the last 52 seconds now, according to CNBC over here, and GameStop is 51.06, and it is not apparently getting swacked with a whack of stock at the end of the day. Although I'm watching it 51.10. We're watching the last few 30 seconds go through now. 51.40. Volume on the day for GameStop is 35,750,000, 35.75 million. 51.19 last trade now, and we're coming through the close. The bell is ringing, and so there doesn't seem to have been an attack at the $50 mark, although the close was $50.12. There was an attempted attack. Again, I'm behind. I don't have a Bloomberg terminal here with the second microsecond update. I'm just looking at my crude systems that I have here, my phone and my market watch. $50.12 was the close on the New York market. So someone did try to dump the stock at the end to get an ugly print, but they couldn't break the 50 barrier, it would appear. Aftermarket trade now 51.78, so it's up $1.60 already in the aftermarket, and that's where it was 15 minutes ago. So the aftermarket trading now is higher because whoever the seller was, maybe a short seller, tried to hit the bids and couldn't knock the stock off its perch at 50. Now tomorrow morning, We'll see what happens. All bets are off. Here we go again. So the shares officially for GameStop on the day will show a loss of 19 cents on the day, when in reality, the only time the stock was upside down under the break-even line was on the opening for the first 30 minutes. It had a brief run into the 55 range, and then it backed off from about 10 to 11 o'clock, and it was negative, and then it had a run to the positive side for the whole day, peaking at about 1:30 this afternoon at 62.83, with a wonderful chart. You can see the day trading chart right here. Look at that peak right there. There was the high of the day, but then it meandered along all the way to the bell. That's right here. Sorry, that's the bell right there. And the last trade to get the print, to get a negative print on purpose, the short sellers or whoever these guys are, hedge fund operators, I'm not sure, slammed the bids as hard as they could at the end of the day, but they could only stop it, get it down to 50.12. And that was a 19-cent official loss on the day of the stock. Another down day. When of the 35.75 million shares, I would bet you 30 million shares traded above the price from yesterday's close. But the final print is the final print, 50.12. It is now 51.51, up $1.35 in the aftermarket. There you go. That's what I've got. That's what I see. That's what I know, and we'll see just what comes of it. Will there actually be bloggers out there ignoring the fact that the stock traded at $62 a share today and just talk about how it had another terrible day and lost another 19 cents? I don't call that a terrible day, but I will say that the last 40 minutes were very heavily manipulated by shenanigans on trading desks. Yeah, that's what's going on. But apparently, this is allowed under the SEC rules. The firms, all the brokerage firms, they contribute their 2 bits worth of advice to the SEC, telling them how they want the business run and what they think is allowed and what they feel that is in a conduct, acceptable conduct by members. And here we go. This is an acceptable conduct that's allowed, apparently, but it sure doesn't look good. Strike, wouldn't it be easier for shorters to knock the price down during low volume, pre-market, after hours trades? Are they allowed to trade at that time? Why is pre and post volume so low besides no options trading? Well, not every firm is into the aftermarket. Most brokerage companies have seats to the New York Stock Exchange. A lot of platforms that allow you to trade will trade through brokerage firms that are members of the New York Stock Exchange, and so most of the trading is handled there. When it comes to banking arrangements, if you are using stock as collateral for a loan that you might have, a personal loan through a banker, or to apply and qualify for a mortgage, you have to show your assets. The closing price or the trading range of the stock on the stock exchange is accepted by the bankers for actual valuation, not the aftermarket trading, not the pre-market trading. So again, pre-market and aftermarket trading is more of an indication of momentum as opposed to a hard rule as to what the stock is actually worth. But I will comment that 2 weeks ago, when the shares were running up, I would wake up at 4 in the morning and I look at the pre-market. I go, oh my gosh, GameStop yesterday was $110 a share. It's 220 right now. And sure enough, on the opening, it would open up at $200 a share. Again, it's an indicator, but it's not a guarantee. At this moment in time, it's 51.37, up $1.25 from the artificially dropped price at the bell by someone who wanted to get an ugly print. This game of setting prints is an art form, and when I was a desk trader and a branch manager, the end of the month was always very important to brokerage companies, brokerage firms, to publicly traded companies, to stock promoters, and to floor traders. The end of the month, The last trading day of the month was a big deal to those entities, those people that were long stock. They wanted to have a good print at the end of the month, and I would be called, when I was helping to create an orderly market for a couple of public companies. I was a market maker back in the 1980 range, before there were actually professional market makers like they have now. But I was doing this on the Alberta Stock Exchange. We're talking penny stock. We're talking stock under $5 a share for the most part. And I had one president always talk to me the day before month end and on month end. And we would review where his shares have been on the market for the last 30 days. We would review any shenanigans that were going on or we were aware of. Were there any pro traders on the floor that were, trying to make the stock look bad because they were short? That kind of stuff. Any promoters we had to worry about? This kind of thing. So on the last day of the month, I knew, and everyone else knew, that certain floor traders who were short certain stocks had to be out of the position for month end. They could take a new short position on the first trading day of the next month. That might be a Monday to a Tuesday, but it might also be that the month end is a Friday and the first day of the new month is a Monday. It all depended on the calendar. So we knew month end was a big deal to everybody, and we had longs who had to get out, shorts who had to get in. Everyone had to be flat for the night, and then the next morning, all hell would break loose when the markets opened again for the new month. And so I would be talking to the president of the company on the phone. He'd be calling me from his office right at the bell. We'd be talking, and I would have my floor trader yelling at my desk trader to yell at me what was happening in case anything stupid was going on. And by that, we meant if the shares had been trading for this public company between $2 and $2.40 for the entire month, the last thing the president wanted to see was a seller come into his market, into his company's stock in the last 15 minutes or 2 minutes or 30 seconds of the month, slamming the bid and making it close at $1.10. That's the last thing he wanted, because the statistics would come out every month showing the high, low, and close of his publicly traded company. And he didn't want to have a monkey deal where his stock was showing $1.20 close, when in reality, all the stock that traded between legitimate transactions were between $2 and $2.50 a share all month long. So we would keep an eye open for that, and we would have buy orders at the ready. My floor trader would have instructions. And if the market was 202 to 205 with 15 minutes to go, he would have orders and instructions to contact us directly if we had enough time to make a move, or he would have a buy order in his back pocket. And he would have an order, the stock might only trade 20,000 shares a day, 40,000 shares a day. He'd have a buy order in his back pocket for 50,000 shares to buy at $2 if necessary, so that it will in no way break the $2 barrier for month end. There's not a chance in hell. So if there's someone trying to mount a short attack at the month end, no luck here. You're not going to drive this thing down. Of course, we also had the uptick rule, and that meant that a short seller could only short a stock on an up trade. So we would never trade. We would never let it trade at $1.99. Because if it traded at $1.99, he could put in a $2 offer, or if it traded at $1.98, he could put in a $1.99 offer and not let us get it up over $2. So all day long at the end of the month, we didn't let it get under $2 all day long. If this was artificial crap selling that someone's trying to pull a fast one on us, there was too much power in this house to mess with us, and these floor traders knew it. They didn't dare do it, because they also knew that if they would you're messing with a brokerage firm and their in-house stock that they're monitoring, and there are brokerage firms that have 15, 20 of these stocks because they underwrote them. They took them public. They have all their directors as investors. You want to mess with a brokerage house on a stock at the end of the market, at the end of the month, you are in a world of hurt starting tomorrow morning. Because you're going to run into all kinds of problems, because the word is out that floor trader over there with that firm over there messed with this firm's accounts, with their house accounts, oh, they would have problems with their stocks, all kinds of problems. There would be all kinds of rumors going around about companies having problems, not being able to pay bills. They might get delisted. Oh, there was problems. Rumors, just rumors, can't substantiate them, but oh, it got ugly. No one did that. There was a gentleman's agreement. Again, I'm talking about the day when there were floor traders on the floor of all the stock exchanges. Everybody knew everybody else, and you didn't mess with my cooking, and I didn't mess with yours. Yes, if a company was legitimately having problems, they were, used to be a $200 stock, and they are now a $50 stock, and then they were a $20 stock. That company just can't raise any money. They're losing bleeding money left, right, center. They're shutting down operations. Oh, that's a free-for-all. That's a company going out of business. But when it comes to market making at month end to try to get the month end print to mess with it artificially, there were relationships all over the place on the floor that would not allow that. And the senior floor traders, the guys who've been around a while, and the floor traders who were like, they were like the managers of the floor. They kept floor traders in line. They were the ones who stopped fistfights. These guys would step in, and they would look at this trader and that trader and say, cut it out. And these guys would back off. Because if you upset the floor managers of the stock exchange, you're out of a job. You're not going to be here much longer, because the phone call would be made to the head office of the brokerage firm to say, this floor trader really isn't welcome here anymore. And that guy's gone. He's not there Monday morning. He's not there. He's miraculously is gone. So there were gentlemen agreements. There were understandings. And there were certain things you didn't do. It's like baseball. There are unwritten rules in baseball, and there are unwritten rules in hockey, and unwritten rules in basketball. Certain things you don't do. Same thing on the floor of the exchange. Come month end, come Friday afternoon, Friday before a long weekend, people want to go home early. You don't mess with certain stocks because you think you can. Because, the price you pay come Monday or Tuesday when you're back, you wish you weren't born. So, yeah, it just didn't happen. Anyway, there you go. But today, GameStop got messed with at the bell. It was at 51 something, and it got hit down to 50.12. The aftermarket, it started off with a bit of a bump. Right now, it's 49.95. All's fair in love and war in the aftermarket. There is no protection for the stock at 50 in the aftermarket. So if somebody wants to monkey with the stock, these are just indications of activity, but they are not cut in stone as far as the actual trading value of the company during market hours. All right. And so there's your little story of the day of what it used to be like as a desk trader, floor trader, branch manager, compliance officers wanted to know, especially stocks that were at $2 or more, because remember, or I don't know if you do remember this, I mentioned this the other day, that if a stock traded at $2 or higher, you could margin the stock. If the stock traded at $1.99 or less, you might not be able to margin the stock, and you may have major margin calls the next morning, the opening. So month end for brokerage houses, it was important for brokerage firms that stocks trading around that $2 level closed at $2 or higher, because there could be millions of shares of stock on the books of the brokerage house that are being used for margin purposes to cover clients' accounts and positions. And so the $2 number was absolutely important. If a stock had no support, there would be no reason to keep it at 2, but there would be no margin on it either. But if a stock had come from 275 and had backed off into the 220 range, brokerage firms would take a good hard look at the support level at $2. And I can tell you that brokers who knew the president of the company or knew directors who had access to the they would be making calls going, hey man, you're down to 220 a share here from 275. And I can tell you that in this branch of this brokerage firm, there are hundreds of thousands of shares held by investors that believe in you guys, but they're margining this stuff. And if your stock goes under $2 a share, you could have a problem with hundreds of thousands of shares of selling coming into the market the next day for margin calls. You don't want that to happen. I'm warning you now at 220, don't let this 20-cent barrier get wiped out. And so there would be phone calls made all over the place between the insiders of the company, friends of the insiders, associates of the insiders. All kinds of buying power would be found everywhere, and there would be massive bids at 217, 16, 15, 14, 13, 210, and at $2 there would be unbelievable power of buy interest. And for just miraculously, more shares were needed between 2 and 220 that could ever be supplied by the market. And don't be surprised if it actually inched back to 230, 240 again after having a bad couple of days. Those were the days back then. I remember those very, very well. And there were sleepless nights where branch managers would go to bed going, oh God, we got 6 companies, 6 stocks that are under pressure this past week. And we got to hope that they hold the line at $2, or we're going to have customers that we're going to have to sell out. And we might lose them as customers because they bought in at $2.50 and $3 and $3.50 a share and margined this stuff for whatever reason they were doing it. And they are exposed to a whole bunch of hurt if we have to sell them out. They might not trade with us anymore because their accounts are wiped out. They got no money. And now I've got stockbrokers in my branch that this guy lost 15 accounts, this guy lost 5 accounts, this guy lost 8 accounts. That's not good. We don't want brokers with not having accounts to trade with because we were a commission house. We were making our money on the commissions, not the price of the stock necessarily. But for margin purposes, we had to know. And so, yeah, those are the days back then. Anyway, there you go. Thank you for tolerating that comment. Oh, the old days. Those were times. You don't see companies going public anymore. $2 a share, $4 a share. I remember the days when companies would go public at $5, $10 a share. They go public. Full-blown assets, cash flows, 250 employees, $10 a share to go public. And we'd hope that the aftermarket would go to 10 or 11 or 12. And that would be success. Nowadays, you got IPOs at 18, 20, $30 a share, and the first trade is $75, $150. That's today, but that was not yesterday. Yesterday was a whole other world. It was a slower world. Things moved a little slower, but there was still stress. Trust me. Alrighty, what do we got here? Tilray was the latest squeeze. I don't know if that's true. A lot of people were jumping on Tilray today as a pot stock. I'm not sure if that's really the way to go. Again, I'm not so sure. Sir, this is a casino, says Tico. In a way, yeah. It's legalized gambling. It has been forever. Charlie, thanks, Bruce, for your wisdom. Thumbs up, Bruce, y'all. Fantastic, guys. Thank you. Thumbs ups. We need the thumbs in the right direction. How many thumbs ups we got today on this show? We got 633 of you giving me a thumbs up right now. There are 1,229 of you still watching me. I could sure use some of you giving me a thumbs up. That would help a lot. Please do hit that thumbs up button, and that would be absolutely marvelous if you could. Thank you. Charles, you got to keep that language. You got to be careful with the language. Sorry about that. Can't show that comment. Can we get Bruce to 50,000 subs today? I don't know if that's going to happen. Where are we at now? The last time I looked, we were at 844, something like that. 847. So 49,847 subscribers. Please do consider subscribing to this channel. Get us to 50,000. That would be great. 730 thumbs ups right now. Thank you for those coming in. 737 now. They're slowly trickling in. The more, the merrier. We appreciate it. 49.54 on GameStop in the after-hour market right now. That's where we're at on the aftermarket trade. For the day, we ended up at that 51. What was it? 51.12 or something, right? Well, now I'm showing a close on GameStop, by the way. I'm showing a close now at 51.20, up 89 cents. Now, did New York negate the trades, or did they adjust the trades? Was there a flurry of actual buying at the end and selling, and the market maker made the final adjustment? These can be done upwards of half an hour after the close to truly reflect the price of the stock at the end of the day. We're showing it 51.20 now as a closing price for GameStop, 51.20. On the aftermarket, 49.55 is what I'm showing right now. So the shenanigans continue. Some people want certain kind of prints, and some people don't. It's just the way it goes. Okay, what can I say? Yeah. Anyway, there you have it, folks. We continue to press ahead, and we do the best we can with what we have. Certain comments are just not appreciated, and we let you go. So please be mindful of the comments you're making. It's a PG-rated show, we hope, and we'll do the best we can monitoring it, although sometimes it isn't easy. Okay, there's GameStop, 49.93, right under that 50 level at the moment. Volume 82,000 shares in the aftermarket. It's absolutely quiet. And those the final stats for the Dow looks like 61-point gain for the Dow, 1 point loss for the S&P, and a 35-point loss for NASDAQ. Not a lot to get excited about there, although the Dow did eke out a bit of an uptick when it was all said and done. So there you go. MGM Resorts revenue falls 53%, says the headline, as Vegas struggles. Absolutely true. Las Vegas is struggling. No question about it. Excuse me. Zynga's game is on, it says. Record sales and booking for the fourth quarter. Zynga is definitely having a run. They recorded quarterly bookings of $699 million, up 61% year on year, showing you gaming results. I find that always interesting to watch. I'm always curious to see how the gaming stocks are doing, because this is also a bit of a reflection on what's possibly happening at GameStop. Even though GameStop is a physical store and you buy physical items, these online gamers are also a reflection of the business as a whole, and we'll see what comes of this going forward. I like seeing the online gamers doing well. Let's see here. Any other comments we need to worry about today? I don't think I see anything massive here. We're really not seeing much in the way of headlines to worry about. On the aftermarket, Dogecoin's retail punters are going to lose money, says a crypto expert. We get those comments all the time about all kinds of crypto units. We'll see what happens. What else is going on here? CSX increases dividend by 8%. What else do we have? There's not much else coming out of here in the aftermarket. Not much being said. Uber stock falls as losses narrow, but revenue falls short. So Uber is not delivering. Happy news for the viewers out there, for the followers of stock. Interesting to see that. We'll see how Uber shares do going forward. Right on. Okay, coming back into a couple of quotes here, just double checking. We'll see where we're at here. GameStop aftermarket, $50.01 a share, kind of hanging around, and not a lot of volume though. Not very heavy. Over on, let's take a look here on the Virgin entity, Virgin Acquisition, VG Acquisition Corp, $14.22, down 7 cents. Not much going on there. I didn't expect much in the aftermarket. The Gore Holdings, number 6, $18.80, up 55 cents on the aftermarket. Having another good shot in the aftermarket. Very interesting how that one is not really backing off aggressively yet. AMC, $5.67, down 13 cents in the aftermarket. Not getting any good momentum aftermarket at all. And that's what I'm showing on most of these guys right now. GameStop, $50.33. That's where we're at right now. Questions are being asked. Is the market in for a correction in 2021? That is a question you can ask every day of the year of the market, no matter where the market is. Where the market is. The market's an all-time high. Is it going to have a correction next year? It's at an all-time low. Is it going to go lower? It's in the middle somewhere. Is it going to back off? That's a question. These are the perfect headlines for people to write articles on the markets It's always the same question, always the same. Will the markets keep going higher? Can they recover their losses? Will they set new records? And then write your story. It's always a great clickbait kind of topic to kind of go with. And there you have it. Welcome to the markets and the way the markets are. It's all psychological. And what can I say? That's the way it is. All right. Herman is asking me a question about options. Uncle Bruce. When placing a covered call option, do you not start collecting the premium until a buyer enters the contract? Okay, the wording isn't so good here, so let me try to explain this a little bit. If you own 100 shares of GameStop at $50 a share right now, you bought them today, you've already got them, it doesn't matter. They're trading at 50. During the market hours, you could write or create a call contract against your 100 shares of stock. You decide which option you want to sell, create, write. There's all kinds of terms for the same thing. Do you want to sell a contract that expires this Friday? Very short. Do you want to create or write a contract that expires next Friday or 6 months from now? Anywhere in between, it doesn't matter. Every Friday is an expiry day. Pick the contract you want to sell. Now, what price, what exercise price do you want to write a contract at? Stock's at 50. Do you want to offer your stock at $50 a share until Friday? Do you want to write a contract that has an exercise price at 55 that expires this Friday, or 60 or 65 or 70? Pick your price. How much will you get for it? The higher the exercise price from where it's trading at, and the shorter the amount of time you give the option holder time to exercise your contract, you get less money. The shorter the contract, the further out in the money it is, the lower you're going to get for it. So if you are going to write a contract that expires this Friday at $60 a share, you're $10 out of the money, and you're giving the person 2 days, tomorrow and Friday, to exercise the contract with a $60 strike price. That contract is evaporating in price dramatically if the stock sits at 50. If you're giving someone the option, you're selling an option that expires a month from now at $60, you're giving them much more time. You're only $10 out of the market. The stock today broke $60 a share. So between now and a month from now, who knows how many times it could break $60 a share, go much higher, or could go lower. You're giving them a month to figure it out. You'll get a higher premium right now, and you can keep that money. That is your money. If it's $5 a share, $10 a share, $8.50 a share, whatever it is. If it's $8.50 a share premium, you get $850 because one contract is represented by 100 shares. The premium is $8.50 a share, you get $850. If you offer somebody a $50 contract right where the stock is trading at, good for a month, you might get $15 or more. I'm not sure what the price is. But let's say it's $15 a share. That's $1,500 you get right now. But you're offering a person the opportunity to take your stock off your hands at the current price per share. So if you bought them now and you write the contract now and take in $15 now, you got $15 back of your $50. If they buy the contracts from you, if your option gets exercised because the shares go up in price, you will get $50 a share for the 100 shares you put up on the deal, on this contract, on top of the $15 you've already got. You just sold for $65 a share. You're up $15, 30% on your money for a month. All that sounds really good. I mean, a 30% return in 30 days on a stock you just bought for $50, you got out at 65. That's all good stuff. On the other hand, if you write a $60 call for a month and you bring in $8, you get $800. But if the stock goes high enough and you get taken out at 60, you get $68. Again, you made an $18 profit on the whole deal. You made $8 in premium money and $10 profit on the exercise price. You bought at 50, you sold at 60, you got $8 from the option for the premium. You got a $68 price. If you write a 3-month contract, 90 days of life you're offering at $60 a share, you might get $20 a share right now. That's $2,000 for your $5,000 purchase of stock. You buy $5,000 worth of GameStop. You get a $2,000 premium right now in cash. You're only into the stock for $30 a share, but you're on the hook to offer it at $60 a share for the next 3 months. You can't buy and sell your stock in the meantime. You got to keep it in your account because you've written a contract against it. So you got to hold the stock. But if you get taken out, you get $60 a share plus the $20 a share you got already. That's a gain of $30 on a $50 buy, a 60% return on your money in 90 days. That's how this game works. But if the shares go down to $40 and stay there, you're down $10 a share from where you bought them because they're at 40, but you still have the $20 you were given to give that option buyer an opportunity to take the stock off your hands at $60 for 3 months. But if 3 months down the road, the stock is sitting at $40 a share, you got the $20 in your pocket and you only paid $50 for the stock. You're now only into the stock for $30 and it's trading at $40. You're still up $10 a share. You're still up. Now the option has expired. You could right now decide to write a new contract, 3 months for $50 a share, and maybe you'll get $20 again. So you bring in another $20. You're still holding the stock you bought at $50 way back when. This is now $40 you've been paid. $20 the first time you wrote an option, $20 the second time you wrote an option. You got $40 for a stock that cost you $50, and all you've given the world is 6 months' time to take it off your hands. That's all you've done. And if they don't take it off your hands because 3 months later, again, they're sitting at $40 to $50 a share, no one's going to buy the stock off you for $50 if they can buy it at $40. So you got the stock, it's trading at $40, but you're only into it for $10. You're up $30. You've got $4,000 cash in your hand and you own 100 shares. And now you can write another contract. Do you want to write another 3-month contract for $20 at 50? If that's what the market is giving you, you take it. Now you're ahead. You've got $60 cash and the stock, and whatever the stock is trading at. If it's trading under 50, they won't take it away from you. And if it's $40 a share, you got 40 in stock, 60 in cash, you got $100 for a $50 initial purchase of the stock. It's called making money. And so if you're a holder of the stock, you can give people the right to take it off your hands, depending on how long you want to write the contract for and what the exercise price you'd like to offer it for. And there you have it. Now, I've told you before that if you did offer the stock on a contract for, say, you buy it today 50, you write a $60 contract, and the shares go to $59 a share with a couple of days to go before the option expires, you're still out of the money. Technically, the option is worthless, but it still has a day to go, so it might be worth $1 or $2. But if you sold it for $10, you can buy it back for that $1 or $2 that it's trading at if you want, and take the last 24 hours of risk out of the game. You won't be taken out. On the other hand, what do you care? You paid $50 for the stock, and you're daring the guy to take it off your hands at $60. If it goes to $61, you'll be taken out at $60. You don't care. You got $10 a share cash, $60 a share on the option. That's $70. You paid $50 for it. You're up $20. Good game. On the other hand, if you buy the contract back at $1, that's what it's sitting at in the middle of the day towards the last day that it has to live, because it's just out of the money. You buy it back for $1. You've locked in a $9 gain on your contract, and now you can write a new contract right now for next Friday or the Friday after that or the month after that, or whatever you want to do, at whatever price you want to pick. The stock's at 59, you might write a $70 contract. So it's about $10 out of the money from the current value of the stock, and get $10 for that for, say, a 1 month contract or 5-week contract. Thank you very much. And you'll take the $1,000 in there as well. So you made $900 on the first contract. You got $1,000 in on the second contract. You're sitting on $1,900 cash. You bought the stock for 50 and it's trading at 59. You're up $900 on the stock. You're up $2,800 right now. And if the stock goes to $69 before the expiry of the other contract, you're up another $10 a share. And you can just buy that contract back for $1 or $2 towards the end of its life and do it again. Many ways to roll this position over. Lots of options. I hope that I hope a lot of you can get that. I hope that I'm not confusing too many of you. I know a lot of you keep asking me about how to do options. How do these work? What's the deal? But I hope that I'll be able to cover that, right? So you don't collect the premium on a covered call option until someone buys the contract. You get the premium when you sell the contract. The contract is worth so much money today. It has so many days to live. There's a value to it. You get that money. You sold a contract that you've created. But the actual exercise price, if it's exercisable at 60 and it's trading at 50, you're not going to get the $60 exercise price, because the guy that paid you, whatever they paid you, for the right to buy your 100 shares at $60 for 2 Fridays from now or longer, they're not going to buy it off you for 60. It's on the market at 50. So the contract dies worthless. They lost the premium they paid you, the money they gave you for the right to get that stock off you. They've given it to you. It's all yours. It's yours to keep forever. And now you can write a new contract all over again. How can you lose money with options? If you're the buyer of a contract that is exercisable next week, Friday, at $60 a share, and the stock is sitting at 50, you are in trouble, because you're $10 out of the money. And if you buy the contract right now, say it cost you, I don't know, $8, and tomorrow the stock trades at $65 a share for 10 minutes, your contract might be worth $13, because it's $5 in the money with an $8 premium to it. Maybe you can get 12 or 13 for it. You make $4. If you sell it, you made $4 on an $8 buy. You sold the contract to another person who's taking the risk that the shares are going to go higher than 65. But let's say they don't. That person buys them off of you at 12. You sold out. You're sitting on the sidelines. The shares come back to 55, and now you want to buy that contract again. Well, you're not going to have to pay 12 for that contract. You might be able to get that contract at $8 again, because it's out of the money. The stock is the option is a $60 option. The guy that bought it at 12 is the loser, because it's now sitting at 8. You're buying at 8, hoping the stock goes to 65 again, and you score another $4 gain. That's $400 a contract. So you bought in for $800, you sold for $1,200. You bought in for $800, you sold for $1,200. Some guy bought them at $1,200, and they're only worth $800. He sells them, he loses $400. He hangs on, they come back, he's breaking even. He gets out of $1,200, he broke even. But he was down $400 at one point, and he got even. The closer you get to exercise day, the expiry day, the premium value of that contract expires, it disappears. So you bought the contract with a week to go, 2 weeks to go, it's $8 out of the money, but it's $8. As it comes into expiry day with 2 days to go, it's only worth $4, because it's only got 2 days to live. The stock better do something in 2 days, or you lose everything. Option buyers are the biggest risk takers, because they can lose it all. Time is their enemy. The one who holds the stock, who sold the contract, who made the contract, time is their ally, because the clock is running out on that contract, and that exercise price is up here and the stock is down here. Here's the exercise price. The stock is here. If that stock doesn't come up there, they're not going to take your stock from you. That option will expire worthless. You keep all the money you got for it. That's why option writers are usually winners versus losers. All righty. Here, David is saying, I write covered calls often. I just own 100 shares. I make the covered call out of the money with a premium that you're comfortable with in case you lose shares that are being exercised off of you. As soon as someone takes your stock away from you, they give you your money. They give you that money for the stock, plus the premium you got, you can turn around and buy the 100 shares back on the open market and write another contract against those shares. You can keep this game going forever. It's all a question of whether you want to be a writer of a call or you want to be just a shareholder only and not be writing at the same time. That's another way to go. Petty, yes, you can lose on potential income by the price rising massively, say to 100, and you're forced to sell at the agreed price of 60. That's right. You bought the stock at 50. You wrote a $60 call, good for a month. The stock goes to 100. You get taken out at 60. You already got $10 a share on top of it. So you got 70. You bought at 50, you got 70, but it went to 100. You didn't get the other 30 because you agreed to sell at 70. I mean, at 60 plus the premium. That's $70 you got. You made $20, 40% on your money, but you could have doubled your money. Sure, that could happen. But in theory, if you got out and you made a profit, the stock is now trading at 100, muscle up enough money to buy 100 shares at $100 a share, and then write a 120 contract, good for a month. You'll bring in $20 there. And so now your cost is 80. You sold out at 70. You're only out $10 here. And this contract is now a 120. If you get taken out at 120, you're getting 130 or 140, depends on how much money you got for that premium. So you're pulling the string and you're continuing the game. James, hi from Calgary. Love the stories from your time here. What are your thoughts on the psychedelics? Clinical trials happening this year, and Kevin O'Leary and Peter Thiel are bullish on PSYK. Don't know anything about it. The psychedelics, I'm lost on that one. I'm not following that. PSYK, let me just punch that in if there is a symbol for this. PSYK, let's go there. Horizons Psychedelic Stock Index ETF. No data available here. No pricing. I've got nothing on it. I don't know what to make of it. I'm not. Can't comment on this thing. I don't know. When I see more, I'll know more. But at the moment, I know nothing. Like Schultz from Hogan's Heroes, I know nothing. Let's go, Tracy. In what situation do you suggest buying a call, and in what situation selling a put? Well, if you are short 100 shares of stock, GameStop, and you're short at you're short at $50 a share right now, where it's trading at. No, let me stop right there. Let me start all over again. I'll go backwards. You own 100 shares of GameStop at $50 a share, okay? And tomorrow night, they're going to come out with their earnings report for the fourth quarter. And you're praying that they're coming up with a surprise, wonderful number for their earnings. The shares are going to go to $80 a share. You're hoping that'll happen. But you're worried that, oh gosh, what if the numbers are wishy-washy and market traders don't like what they see and the shares could go to 30. You don't want that to happen. You don't want to lose money, but you don't want to sell the stock because you're hoping it'll go to 100 and you feel pretty good because those game systems are just, flying off the shelf. As a matter of fact, they don't even land on the shelf. So you want to be long. You could buy a put on that day. You could buy a put contract. So you buy one put contract at, say, $45 a share, where you have the right to sell your 100 shares to somebody else at $45 a share if you want to. And let's say you're paying, I'm just going to use a pretend number. Let's say you're paying $5 for the privilege because the put expires on Friday and it's Wednesday when you do all this, all right? It's got 2 days to live, but the report is coming out tonight. Wednesday night, out comes the money. How much did they make? Thursday morning, the stock opens for trading. The numbers were not well received by the street for whatever reason. They didn't like it. Shares are at $30 a share on the first trade of the day on the New York Stock Exchange. You're down $2,000 on your 100 shares of GameStop because you bought them at 50, They're trading at 30, but you're not going to sell those shares. You want to hang on for the long haul. But the put that you bought at $5 is actually worth $20 a share, because you can sell stock. Well, actually, it's worth $15 a share, because you can sell stock at 45 and it's trading at 30. You can theoretically buy stock at 30 and sell it at 45 to this put holder. Your put will trade at probably $18. You paid $5 for it. You've made $13 a share profit on the contract. You sell the contract. You sell it. Now you've got $1,800 cash in your pocket. You only paid $500 to get it. You're ahead $13, $1,300. That represents $13 a share. So for the $50 stock you bought, you have $13 of protection. You're actually now only exposed to $37 for the stock you've got. Okay, it's trading at 30 right now in the opening, but you're going to be holding it long term. You're into the stock now for $37 because you got $13 cash where you made a profit on the put contract. Now, your brain is saying to yourself, you know what? These shares are $30. They're not going to stay down here. In a week or two, they'll be back to 50. I'm just sure of it because more good news is coming. Maybe the stock went down too far, too fast this morning, and in a couple of days, it'll be back to 40 or 45 again, and it'll work its way back to 50. Well, you've already made your $13 profit by selling that put for a profit. So you're only into the stock for $37. So now what you do is you buy a call contract. You hold your shares. You're not doing anything with those. You're buying a call contract, but you're buying a $35 call contract. It's $5 out of the money. It expires maybe next Friday. It's going to run you $7 to get, let's just suppose. Again, I'm making up these numbers. So you buy the call for $700, $35 call that expires next week, Friday, or the Friday after that, whichever one you can get for the length you want, time of want, and the premium you're prepared to pay. The shares 3 days later are $42 a share. All right, they're not back to 50, but they're not down to 30 anymore. They've kind of recovered, but not all the way. They're at $42 a share. You have a $35 call contract. You're $7 in the money, plus whatever time you have left before the expiry of that contract. If you've got 4 days to go, that contract might be $11. You paid $7 for it. You're up $4, $400, $4 a share. You sell the contract. Now you've taken that $400 against the cost of your stock, which was $37. It's now a cost of $33. You've made enough money to bring your cost down to $33 of actual exposure, and it's trading at 40, 42, $43. You're up on the whole thing. That's one reason why you would buy a call or a put being a shareholder anyway. That is a strategy. Now, people do that, but they're gambling with that extra money. They're really taking a risk. It might be a risk worth taking. It's certainly a way to protect against a downward surprise. If you hold the stock at this price and you buy a put, it'll protect you against a partial loss. Not all of it, but a good partial loss. Some traders will say, well, I own 1,000 shares of stock at, say, $50. But I'm going to buy, instead of buying 10 call contracts, which equals 1,000 shares, I'm going to buy 20 Instead of buying 10 put contracts for downward protection, I'm going to buy 20 put contracts for downward protection. That's 2,000 shares of down protection against 1,000 share position. The thinking is I'm in at $5 a contract, and I'm going to get out at $15 a contract, but I'm making the gain on 2,000 shares equivalent, and that protects me for all my 1,000 shares. So I bought at 5 and I sell at 12. I've made $7 times 2,000 shares, $14,000 profit on the put contract, which I'll put against the cost of my stock. And now I'm protected all the way down to whatever the price is, $36 a share or whatever it might be. So they do that too. They'll actually buy more puts or more calls than the stock they've actually got to amplify the protection, but they're taking a bigger risk because it's money that could go to worthless if the stock doesn't go down or doesn't go up, depending on whether you buy a call or a put. It might go down after your put expires. It might go up after your call expires, and you didn't win on the contract. So that can happen, and it has to many of us out there. All right, lots of strategies with these calls. Jamin, so you cannot lose money on a covered call. You may or may not lose your shares. Like I said, you are taking a chance by offering your paper at a price. If you bought GameStop at $240 a share and you have 100 shares, maybe you bought some more now at 50, and you've got 100 with an average of $90 or $100. You offer a call contract against your position. The stock right now is $50. You write a $60 call, get $10 for that premium. You're going to get out at $70, $10 gain on a $60 exercise. If you get taken out, you'll get $70. You still lose $30 on your position, but right now you're down 50, right? On the other hand, if you bought stock and averaged down and you're in at $100 on GameStop and the stock's at 50 and you're writing $70 calls good for 2 weeks from now, you might not get exercised because it might just not get up there. It gets to 63, 5, and then backs off to 55. Gets to 64, 65, goes back to 58. It just can't get to 70. That's good for you as a writer of a contract. It's bad for you as an owner of the stock because you want the stock to go up because you've got stock, but it's good for you as a writer of the contract because those contracts, every day that they live, that every day they get closer to expiry, they're worth less money. They're out of the money. Eventually, they will be worth zero on the last day of trading at the bell. They are worthless. The stock is sitting at $54 a share. You have a $70 exercise price. Those options are worthless. You get to keep all the premium you got for them. And if you wrote them for 2 weeks and they gave you $6 a share on 1,000 shares, you got $6,000. On 100 shares, you got $600. And so if your average price is 100, you have $6 towards your $100 cost. You've just dropped your cost base to $94. Now the contract is gone. Your stock is free to do with what you want. Stocks at 50 shares at $54 a share. You might write $70 contracts or 75s. Good for 2 weeks, 3 weeks. Bring in $5, $6, $7 a share in premium for 2 or 3 weeks of time and play the game all over again. And you do that every 2 or 3 weeks for 10 consecutive rotations. If that's the way this game is going, you're bringing $4, $5, $6, $8 every time. You're going to bring in dollars that will bring your cost average down every time. Of course, that's what people do who have stock and write options against them. Okay. Supersonic, why would someone buy a contract if they could just buy the stock? What you say makes sense, but the concept doesn't add up. Well, if the stock is $50 and you buy a $70 call contract, $20 out of the money, but it's good for 3 weeks. It might run you $5 to buy it. It's a $500 buy, $500 commitment that you're making to buy a contract, $20 out of the money. But if the shares in 3 weeks, something good happens and they go to $100 a share, your contract is worth $3,000 plus any time premium on top of that. Let's call it $1. It's worth $3,100. You paid $500. You turned it into $3,100. Now, if you spent $5,000, you bought 10 of these contracts, 10 of them, you've got 1,000 shares of leverage now. You're $30 in the money times 1,000 shares. You're into a $30,000 position. You just turned $5,000 into $30,000. Whereas if you took $5,000 and bought the stock, you'd buy 100 shares. If they go to $100, they're worth $10,000. You've made $5,000 profit on the stock. But the option buyer took $5,000 and turned it into $30,000, triple the amount. See what I mean? That's what is happening in the options market from time to time. Only when they do that, though, if they really have a run, if the stock only goes to $68, that contract that guy bought, the $70 contract, is worthless. He lost all $500, lost it all, took a rant gamble and flew $500 out there, and at $68 a share on exercise day, on expiry day, those contracts are worthless. The guy who sold that contract for $500, or all 10 of them for $5,000, keeps all $5,000, and their shares are worth $68.50 now. They're a double winner. Their stock went up from 50 to 68.50, and they made $5,000 or 500, depending on how many shares we're talking about. Myota, you can buy in the money calls and low premiums to get leverage. That's true. The shares are trading at 50. You can buy a $40 call contract. It's in the money, $10. It might be $15. If you can buy a call contract for $15 with a $40 exercise price that has a couple of weeks to go, and the shares go from $50 to $65 a share, the call contract, that's a $40 exercise, has a $25 book value. It's in the money, $25. You can buy stock at 40, it's trading at 65, plus whatever premium is left on top of that time. That might be a couple of dollars a contract, depending on how much the time they have. If the shares go to 65 on the same day you buy them, they've got 2 weeks to go, your contract is worth $25 plus maybe $5 premium, $4 premium. On top of it, they're worth $29. They're $2,900 each. You paid $1,500. You've doubled your money today on 100 shares. People do that. People were doing that when the GameStop was at $100 a share. They were buying $70 call contracts, $30 in the money, plus premium on top of that. And so they may have had 2 weeks to live on the contract. They paid $30 book value plus $10 premium because of all the volatility going on. They're into it for $40 a contract, $4,000 for 100 shares leverage. And the shares went from 100 to $150. Well, that $70 contract has $80 book value. That's $8,000 right there. Plus the time premium still left on it. Might be another couple of thousand. They're ahead of the game. That's how you got a $10,000 contract you paid $5,000 for. Yeah, that's leverage, man. That's scary stuff. There's some serious betting going on there. What else have we got? Bruce, do you have any awesome penny stocks? Nope, I don't follow penny stocks. I would say, what is happening in these videos that people are posting where they spend $5,000 in options and they end up with negative $60,000 with their brokerage firm? What is that all about? My guess is that they were writing contracts and they were naked writers. So they wrote a call contract at a $60 exercise, and the stock went to 100, and they didn't have the stock. Now they had to deliver the stock, and that meant they had to buy the stock at 100 and sell it at 60, guaranteed loser plus the premium. That could be what that is. That's like shorting, naked shorting, not a good idea. Herman, David S., that's what I would be hoping to do with my shares, generate some cash while holding shares to go towards the purchase price. Absolutely, pick up stock, write options, bring in the premium money, and go from there. What do you think about SNDL? I don't follow it. I don't know what it is. SNDL. We're sitting at where am I? Sorry, I got to go over here onto my other server here. SNDL. Let's see. Who is this? Is this Sundial? I've talked about these before. I don't have an opinion on the stock. It's up 43 cents in the aftermarket. $3.39 a share. That's a penny stock. I don't. It's a NASDAQ issue, but I don't follow it, so I have no opinion on this stock. Probably won't. It's not in my wheelhouse. Anyway, there you go. We are at the end of my day. We have traded for an hour after the market closed, and I want to thank you for joining me today, hanging out with yours truly. I hope I was able to address a number of your questions and make you a little more knowledgeable of what's going on. GameStop 49.47, 1 hour into the aftermarket. It will continue to trade in the aftermarket for 3 more hours. So it'll continue to trade in the aftermarket for 3 more hours. The volume is light. 274,000 shares have traded today. Thank you all for being here today. Subscribers to the channel now, 49,856. We need 144 more subscribers to reach the magical 50,000 mark. We'll hope for the best and see if we can attract more viewers to this channel, and I thank you for that. Anna Brooks, thank you for sending me a PayPal donation. And Lana Chiang, thank you for sending me a PayPal donation I believe on these shows, on this show today. Thank you very much for that, all of you, for these super chats and PayPal donations. You help make all the difference. Thank you for the 845 thumbs ups on the way out. Please hit the thumbs ups if you don't mind, and add to that tally. I would appreciate it. We'll see you tomorrow, 1 hour before the market opens up. I will be on the air tomorrow, and we'll see how the markets want to open. That should be 8:30 Eastern time. I will be on the air, and we'll follow the hour, 1 hour before the opening and 2 hours of the opening. See how everyone is doing, see what's going on, and we'll compare notes and see what we hear between now and then. So please stay warm, safe, and healthy for me. Make sure to social distance, wear your masks, try to get your vaccination shot as soon as you're allowed to, and stay healthy for me, and we'll keep you posted on what's going on tomorrow. Tomorrow will be Thursday. Let's see what happens on the markets. In the meantime, thank you, everybody, for being here. I appreciate all of your kind words and best wishes. I pass all my best wishes on to you as well. And we'll see you tomorrow morning at 8:30 Eastern time for the next round of Stock Markets with Bruce in plain English. Let's see what's going on. Have a